In today's video about personal loans rejections, we'll cover 3 topics. 1. 7 common reasons your loans aren't approved. 2. Short-term strategies to improve your future loan applications. 3. Long-term strategies to improve your future loan applications. And 1 trivia question about loans. So, today's trivia question is, which country in the world gives cheap loans to local producers in exchange for Parmesan cheese? The bank charges the producer an interest of 2 to 3% and a fee ensuring the cheese matures properly in the bank vault. Comment in the section below if you know the answer. We'll discuss the answer at the end of the video. Let's get started. Before you apply for another loan, find out why your application was rejected. You'll be able to make small changes to help get your next application approved. Lenders have to lend money responsibly. They can't lend you money if they think you won't be able to make the repayments. Let's look at 7 common reasons your loans aren't approved. 1. You have bad credit history. While bad credit is usually pooled into one, there are varying levels of bad credit. For example, you may never have defaulted on any loans or credit cards, but you might have applied for 5 loans in the past 2 months. Check your credit score to see where you stand before applying. 2. Insufficient income. The lender can't approve your application if they find that your income won't sustain your monthly repayments. Lenders usually have a minimum income you need to earn in order to be eligible for the loan, so check if there is one set. If not, work out what repayments you will need to make and if these will be manageable on your income. 3. Dubious loan purpose. Check that you're able to finance what you need to with the loan you're applying for. Many loans come with restrictions as to how the funds can be used. For example, secured loans can only be secured by certain assets, and car loans usually have an age restriction on the vehicle you're purchasing. Also, if your lender finds out that your loan purpose isn't credible, your chances of loan rejection are quite high. 4. Incorrect details. Lenders will usually verify the details you put in your application, and if they find inconsistencies, they may reject you. 5. Unstable employment or insufficient employment history. Lenders are very meticulous about the stability of your job. Quite a number of lenders insist that you should have a stable job and should be out of your probation period, otherwise they will reject your loan. Probation period times differ, but lenders usually require 3 months of payslips or 6 months for casual employees. 6. You hold too many loans. If you're currently holding several loans, this could give a lender cause to reject you. 7. Low value of secured assets. Lots of lenders have restrictions on the type of asset you can use as collateral for a secured loan. So if your asset doesn't meet these requirements, your loan could be rejected. Pro tip: don't keep applying if your application gets rejected. If you've been refused a loan or turned down for a credit card, think very carefully before applying for more credit. Any credit applications you make, successful or not, will show up on your credit file. Several applications in a short space of time might make lenders think you're desperate for cash. This might damage your credit rating further. Your credit rating affects whether you can get credit and how much you can borrow. It can also affect the interest rate you might be charged. If your loan application gets rejected, improve your next loan application. Let's look into both short-term and long-term strategies to improve your next loan application. Short-term strategies. There are some actions you can take that generally have an immediate positive effect on your credit score, or may even result in approval for the loan. Below are 4 short-term strategies to improve your chances to get a loan. 1. Make a large down payment. If you're using a personal loan to buy a car, a substantial down payment on a car may help you get approved. You'll also end up borrowing less, which means your monthly payments will be lower. Plus, lenders have less at risk with a lower loan-to-value ratio, which compares the loan amount to the value of the car, so they might be willing to approve a loan even if you don't have perfect credit. 2. Use collateral. If you're applying for a personal or business loan, collateral may help you get approved. Offer to pledge something of equal or greater value than the loan amount to help secure the loan. Just be aware of the risks. You could lose your home in foreclosure, or your vehicle could be repossessed if you fail to make payments. Only take risks that make sense. 3. Get a co-signer. If your income or credit were not sufficient to get approved, you might have better odds if you add someone else's income and credit to the application, assuming they have better credentials. A co-signer applies with you and agrees to become responsible for repaying the loan. If you fail to repay, the lender will go after both you and your co-signer, and their credit will also suffer, so only use a co-signer who understands and agrees to take on that risk. Some of the best people to consider reaching out to are a trusted friend or family member with a good credit history and a solid income history. 4. Apply elsewhere. A denial speaks to just one lender's opinion of your financial profile. It's valuable information, but a different lender might have a different view and approve your loan. If you believe that your finances are as strong as you can make them, you don't have to wait before applying again after a rejection. Approach another lender and apply for a loan with them. Try a local bank or credit union and check with online lenders. With auto loans in particular, it's best to bunch your loan applications into a short window of time of 30 to 45 days at the longest to minimize damage to your credit from too many hard inquiries in a short time period. Long-term strategies. Your loan denial might be due to issues in your finances that can't be fixed overnight. If this is the case, consider making deeper changes to your financial profile over time to make it easier to borrow. Let's look at 4 long-term strategies to improve your chances to get a loan down the line. 1. Build credit. Borrowing will be easier in the future if you build a strong credit history. That means you'll need to borrow and repay loans on time. Your credit will gradually improve and you'll likely get better interest rates and fewer rejections going forward. 2. Increase income. Earning more is easier said than done, but it's worth paying attention to your income when you need to borrow money. If you plan to make major life changes, that can reduce your income, such as quitting a job or starting a new career. It's best to pursue them after you've been approved for your loan and have established a plan for paying off the debt. 3. Bring accounts current. If you're behind on any of your loans, get up to date with payments so that your credit can begin to recover. That doesn't necessarily mean paying back all of the debt you owe. Contact your creditors to work out a payment plan and get a written agreement to remove negative information from your credit reports. 4. Pay down debt. Your existing loans affect your ability to get new loans because lenders look at how much you owe relative to your income each month. Reducing debt reduces your debt to income ratio and can make you look more financially capable as a borrower. It will also free up more of your monthly income to repay a new loan after approval. The bottom line. If your loan application is declined, don't give up. Consider the above actions to improve your finances before you apply again. Some won't require much effort, such as clearing up a negative item on your credit report. Others, like building a thin credit file, will require time and patience. But ultimately, these approaches will make you a better loan candidate, which will increase the odds of getting approved in the future. If you have any questions about the topic covered today, please leave a comment below and we'll try to make a video on it. Before you go, the answer to today's trivia question is Italy. Italy's Credem Bank takes Parmesan cheese from local producers in exchange for cheap loans, charging 3 to 5% interest depending on quality, and a fee ensuring the cheese matures properly 2 years in the bank vault. If you learned anything new today, click the like button and we'll continue making awesome videos for you. To stay connected for future videos, click the subscribe button and press the bell button next to it. Last but not the least, if you want to say thank you, just buy us a coffee. Link in the description below. Goodbye, and we'll see you in the next video.